Here's a technique you can use. Buy an undervalued commercial property, go to the bank, borrow against it, and then renovate that property, and your rental income will increase. Then you get a new revaluation, because capitalization rate based on your new rental, it will be revalued at higher than your original amount. You go to another lender, borrow against that. Now you see the gap here. They may not lend you the full 100% amount, so you might be around here, but there's still a gap between the two. And that's your margin. Use the new loan to pay off your original loan, so you get that amount. Do it over and over again. So that's the game we're talking here. On paper, it sounds really attractive, but here's the thing I wish I knew earlier. The strategy is simple, but the execution is really hard. Stick around if you want to hear more about it. I'm going to explain 3 things to you today. Why it is so attractive, the truth about this method, and why it's so difficult to execute. Number 1, why it sounds attractive. You hear someone saying, I control a property with 10 times of my annual income. And then you start to think, saving a little bit of my income sounds boring, and putting some money in stock market doesn't equal to what they can have by investing in property. So you start to think, property leverage, is it really that good? And all of a sudden, you start to explore that territory. Number 2, here's the truth. Property leverage doesn't just multiply your upside, but it also multiplies your mistakes. This is key for you and me to understand, because I'm going to explain to you, number 3, why it's really difficult to execute. There are so many factors that need to happen at the right time and at the right place for this to work. You have to buy the property at the right price, at the right location, at the right time. You need to have the right tenant. You need to have the right tradesman to help you with the renovation. You need to be backed up by good lenders that can lend you money. And if you miss just one thing, this whole thing's going to fall apart. It's no longer a wealth building machine anymore. It becomes a very expensive problem. You check the bank account and realize that interest is still due on the loan that you borrowed. You find out that renovation costs more than you anticipated. You found out that your tenant is leaving, or you found out that the new valuation is lower than you anticipate. Or maybe you realize that the bank doesn't care about the plan that you saw on YouTube. Just saying. But the loan that you borrowed still need to be paid in full. And here's my message. Property leverage rewards those who are really good at number, good at negotiating, managing risk, and have the backup from finance companies. It doesn't mean that we are stupid if we don't do it, but it does mean that it is not a beginner-friendly tool to build wealth, just because someone over here explained it to you within 60 seconds, when in reality, it's not that simple. So what do we need to do instead? There are some practical things that you and I can do before dipping into property leverage, and that is learning to build margin on our budget, margin on our emergency savings, and margin on our knowledge. Leverage is a really powerful tool. In fact, it's really powerful that it can build or break depending on who's holding them. For most people like you and me, our first step is not trying to multiply our money through leverage, but it's learning how to handle the money that we already have with patience and discipline. Thanks for joining today. If you find this video helpful, I think you might find this video interesting, so I'll see you there.